A lot of people are trying to figure out how to make money without working more hours, picking up extra shifts, or burning themselves out. And one of the most underrated ways people are getting paid today is through something called monthly dividend stocks. These are real companies paying real cash to regular Americans every single month. Not quarterly, not twice a year, every month. And today, we're talking about the 5 dividend stocks that are sending out monthly checks right now. Here's the hook. Most investors have to wait 3 months to see their dividend money show up. But imagine having 5 companies in your portfolio that pay you 12 times a year, even while you sleep. And no, that doesn't mean you have to be rich to start. Many people begin with just a few shares. But over time, those monthly payouts grow, compound, and build into something powerful. If you stay until the end, you'll see how all 5 of these companies work, how much they typically pay, what the risks are, and how someone like you can use them to build a steady stream of income.
Hi there. Before we dive in, please take a moment to read the full disclaimer on the screen.
Now, let's get into the 5 dividend stocks paying Americans monthly checks right now. I'll break each one down in simple language, so whether you're brand new to investing or already on your wealth-building journey, you'll be able to understand exactly what each company does. The first company is Realty Income, known by its ticker symbol O. Some people even call it the monthly dividend company, because monthly payouts are literally part of its identity. Realty Income owns thousands of commercial properties all over the country. These properties include things like convenience stores, pharmacies, gyms, and other businesses that sign long-term leases. The tenants pay rent every month, and Realty Income uses part of that rent to pay dividends to investors. And here's the cool part. The company has paid hundreds of monthly dividends in a row. That means decades of consistency. Its dividend yield is usually in the 5 to 6% range, which is considered strong and reliable. The main risk is tied to real estate pressure, interest rates, and the financial health of its tenants. If tenants struggle, that can affect rent payments. But overall, Realty Income is one of the most stable and trusted monthly dividend payers in the market. Next up is AGNC Investment Corporation. Unlike Realty Income, AGNC doesn't own buildings. Instead, it invests in mortgage-backed securities. That means it buys bundles of home loans, usually ones backed by agencies like Fannie Mae or Freddie Mac. AGNC earns interest from those securities and pays that income back to shareholders in the form of monthly dividends. One thing you'll immediately notice is that AGNC has a much higher dividend yield than most stocks, sometimes around 14%. That's extremely high, and it's one reason income-focused investors love it. But with higher yield comes higher risk. Mortgage REITs like AGNC are very sensitive to interest rate changes. When mortgage rates move quickly, the value of the bond-like assets AGNC holds can move too. That means AGNC can experience more ups and downs than a typical stock. Still, for those who want big monthly payouts and can handle the risk, AGNC is a popular choice. Our third monthly payer is EPR Properties. EPR is a company that owns entertainment and recreation properties. Instead of office buildings or apartments, EPR invests in things like movie theaters, amusement parks, ski resorts, and leisure destinations. It focuses on properties where people go to have experiences. This makes the company very unique because it doesn't compete with the typical commercial real estate industry. Its dividend yield is often in the mid-6% range, which is solid. But EPR's success depends heavily on how much consumers are willing to spend on fun. When the economy is strong and people are spending, EPR does well. When the economy slows down, entertainment spending is usually one of the first things people cut. So the risk is higher during economic slumps, but the upside is attractive when times are good. Many investors include it because it diversifies a dividend portfolio with a type of real estate you don't usually get in other stocks. The fourth stock paying monthly checks is Main Street Capital, also known as Main. This company isn't a REIT like the others. It's a business development company, often called a BDC. Main Street Capital invests in small and mid-sized businesses by lending them money or taking equity stakes. When those businesses pay interest on the loans or generate profits, Main Street passes part of that income to investors every month. This company has a very strong reputation because it's managed well, it's selective about the businesses it invests in, and it's known for steady results. Its dividend yield is usually around 7 to 8%. The biggest risk is that smaller businesses can struggle during tougher economic conditions, which could impact the income Main Street receives. But historically, the company has shown strong discipline and a solid record of rewarding its shareholders. And the fifth company paying monthly checks is LTC Properties. LTC is a REIT that specializes in senior housing and healthcare properties. This includes assisted living facilities, nursing homes, and other properties connected to senior care. With the U.S. population aging, demand for these types of properties is expected to stay strong. LTC's dividend yield is usually around 5 to 6%. The risk? Senior care facilities are expensive to operate. Staffing challenges, regulatory changes, and healthcare costs can affect their performance. But the overall demand for senior living tends to remain steady, making LTC a compelling choice for those who want income from the healthcare real estate sector. Now that we've gone through the 5 companies, let's talk about why someone would choose monthly dividend stocks instead of quarterly ones. First, monthly dividends provide smoother cash flow. Instead of waiting several months to see your payout, you get a deposit every single month. That makes budgeting easier, especially for people living off dividends. Second, monthly payments allow for more frequent reinvestment. If you're building wealth by reinvesting dividends, getting payments monthly instead of quarterly accelerates compounding. More compounding means more growth over time. And third, there's something motivating about seeing income show up regularly. It's a reminder that your money is working for you. That psychological boost keeps many investors on track. But just like anything in investing, monthly dividend stocks come with risks too. Some companies with high yields, like AGNC, carry more financial risk. REITs can get squeezed when interest rates rise. Entertainment-focused companies like EPR can feel economic slowdowns more intensely. And companies like LTC must manage the challenges of the healthcare system. So the best approach is to research each company, understand the pros and cons, and decide how much risk you're comfortable with. Now let me ask you something. If you could only pick one of these 5 companies for your portfolio, which one would you choose and why? Would you go for the high yield of AGNC, the stability of realty income, the business-focused approach of Main Street Capital, or the unique exposure of EPR or LTC? Drop your answer in the comments. I'm genuinely curious which one stands out to you. And while you're here, if you're enjoying this breakdown, go ahead and hit the like button. It helps the video reach more people. And if you want more easy-to-understand content about investing, passive income, and wealth building, make sure you subscribe and turn on notifications. Also share this video with a friend who's trying to get into investing. They'll thank you later. Before we wrap up, here's another question for you. How much monthly income would you eventually like to earn from dividends? Is it $50 a month? $200? $1,000? Or something bigger? Think about that number and drop it in the comments. You might be surprised how many other people have the same goal as you. Monthly dividend stocks can become the foundation of a real passive income plan, but it takes patience, research, and consistency. Whether you buy 1 share or 1,000 shares, the important thing is starting. Every monthly deposit you receive is a reminder that your future self is being taken care of. Thanks for watching, and I'll see you in the next one.